Good afternoon, everyone. Hope you're all inside instead of outside in the blizzards today, going across the eastern part of the United States, and hopefully making some money. So, first day that the market's open after Christmas, my stock pick for today is COG, Cabot Oil and Gas. Now, this stock is technically in a very good position to buy once again. As you see, in the past 5 years, since 2009, it's gone up. It's gone from about $7.50 at its ultimate low. I think the actual low is $8.85, and now it's just about at $50. And it briefly touched $50, making a new all-time high, and then it pulled back. Now, the pullback is good because that's normally a good time for us to consider buying. It gives us a low risk, high reward opportunity to get into this trade. So if I jump in here onto a 2-year chart, I'm just looking at this. It's obviously in a sustained uptrend on the short and intermediate term basis. We do have a trend line support sitting at, that would be just about, at this point, around 47.50, so it might be a good place for a future stop loss. We have this resistance level right here, probably just above 50, so that's 51.34. And then what I am paying attention to is this range right here. So I look at this and I see there was a brief consolidation, and stocks tend to exhibit the same behavior over time. So brief consolidation here, shortly after a vertical upward move, and then it broke out, setting a new higher consolidation, and I would totally expect it to do the same thing once again. So let's actually measure the consolidation and come up with a target price for this stock. Now, this is going to be more of a short-term trade, but I also recommend it because, like, compare Cabot Oil to the S&P 500, pretty much since April it's performing. Compare COG to the rest of the energy sector. If I just use XLE Mutual Fund, you see that once again it's pretty much been outperforming XLE all the time besides beginning of 2012 this year, and in the past 2 years it's been outperforming almost every data point since. So back to COG, if we move into a 6-month time frame and we actually just measure the very top to the very bottom of this consolidation, we see that there's almost a breakdown, but then it came back up and it actually gave us a buy signal right here on December 20th. Now that was a valid buy signal. It also came on pretty high volume, but looks like immediately pulled back afterwards. So to actually measure how this would go, we just take the height from the bottom to the top of the pattern, project it from the top of the breakout point, and it gives us a price target of just about, we'll be conservative, just about $53. So I'll mark that down. Target is 53. So right now it's about 49.75. So that gives us just about a $3.25 gain, expected gain. But I think that it would be a good idea to wait to get into the trade, because right now if I do a Fibonacci bracket right here, we see that it pretty much bounced off of the 38.2 retracement level, which is right here. Now I have it upside down, so it says 61.8, but it's the 38.2. So it retraced 38.2% of the previous up move. Now this is good because it's bouncing off that, but the 38.2 on corrections, it's very seldom the end point of the final correction. So with the rest of the market still grossly overbought, with the fiscal cliff issue still going on for the next few days, I would not be surprised if this would get down to about 48.20 and maybe even 48.75. So if I were you, I would be buying between 48.20 to 48.75. Now that's going to give you an even lower risk, higher reward opportunity if the price actually gets down there. So you buy between that range and then you sell if it breaks below about, if I can move out of this view here, We can sell if it breaks below just around this previous low, around 46.50. So that's going to give us about $2 of risk and potentially about, it looks like, $4 of reward. So it's still a pretty low risk reward ratio, very short-term trade, but still, the stock, even if I expect it to exceed this target, because it's a very late bull market, inflationary stocks like an oil and gas corporation, that would be great. So that is my trade. One other thing, other reason why to not buy yet is if I put in the RSI, when we see this putting in a bottom, so we'll delete all this. When we see this putting in a bottom, we should expect a divergence, and we should see some trend line breaks, divergence, but no, we don't see any of that yet. So you see that the RSI is actually making lower lows. So I would expect this to continue slightly lower, make a momentum divergence, so around that 48.50 level, 48.25. That's where you buy, and then we can ride it back up. All right, thanks for watching and happy trading.